Okay, and we are recording, so it is working, guys.
Good.
Okay. All right. Good afternoon. This is Doug Lalone, attorney with Fishman Stewart, and we are live here right now with our webinar called Survival of Innovation, Surviving the New Normal. We're going to give our participants a few minutes to get logged in. We have people coming in now, and while they're busy getting logged in, just a little bit of background about today. Like I said, I'm a patent attorney at Fishman Stewart. It's a patent law firm in Troy, Michigan. We focus on helping clients identify, secure, and advance the creativity of our clients around the world. As a member of the firm, I chair the firm's strategic practice group, where we help our clients, venture capital firms, investment banking firms, and private equity firms. We assist them with their portfolio companies in creating and implementing IP strategies that is consistent with their exit strategies, and for the sole purpose of helping leverage their innovation and to increase enterprise value, of course. So I think we have a good number of people signed in now. I think we'll get started with the details of today. Again, my name is Doug Lalone. Today's webinar is brought to you on behalf of Fishman Stewart and Amherst Partners. The title is Surviving of Innovation, Thriving in the New Normal. A little bit of overview for today. We have two panelists with us today. Sheldon Stone from Amherst Partners. Sheldon.
Hi.
Hello.
Welcome.
And Michael Fluhler from Fishman Stewart.
Good afternoon.
And a little bit of background for today. We're going to have some Q&A going on. Since this is a Zoom meeting, as many of you probably know, Zoom meetings have a chat room down below and a Q&A section, and you'll be able to post questions to our panelists today. Please use that tool. And we're also going to be posting a poll in a few minutes to kind of get some feedback from the attendees here today. So a little bit of background and a little research we did in preparation for today. There's no doubt that COVID-19 will change the business landscape for years to come. The most dire impact estimates for small businesses and other agencies suggest that businesses will be closing at a higher rate, perhaps one per minute in the United States. That's an astonishing statistic. Just today, the local media indicated that 1 of 7 Michigan businesses may not survive this current crisis. All these businesses, regardless of size or industry, are facing two critical challenges, and we're going to discuss these challenges here today. One, the challenge is going to be how to survive the immediate operational disruption that your company is currently facing, and two, how to thrive in the as to what the new norm is going to be. So as economies open, what will the new norm be? That's a question we all have. The good news, however, is that the government has injected trillions of dollars of cash into our economy. According to the SBA news report on Sunday, the second round of PPP program indicates that Michigan business received about $5.5 billion in the second PPP round. That's about 60,000 loans. In total, both PP1 and PPP2, Michigan companies received about $15.9 billion for a total of about 103,000 loans. That's a lot of cash that's been injected into our ecosystem here. Here's another interesting statistic. The average loan size in the second PPP round was $79,000. The average loan size for the first PPP round was about $206,000 per check. And Michigan hospitals, roughly 30 Michigan hospitals, I should say, will receive about $900 million, all because of the CARES Act. So that means there's been a lot of cash injected into our economy in the last 30 or so days, and for the foreseeable next 30 or so days as that cash starts to get consumed. That is a short-term Band-Aid, but that does not take away from the underlying fact that companies are faced with critical challenges on how to adapt to the intermediate operational disruptions, and then learning how to survive in the new norm as economies open up. We will have a conversation about these two critical challenges here today. We're joined today by two innovation experts, Sheldon Stone and Michael Fluhler, as indicated. We're going to be talking about things like how to ensure stability of your business, the importance of innovation in the post-COVID economy, and how business valuations are impacted. Now, the word innovation is used a lot these days, and read an article yesterday by Josh Linkner, who's known in the Detroit market. And here's his definition of innovation in his article yesterday. Innovation is the granddaddy of loaded words. This one feels totally inaccessible for anyone that isn't wearing a lab coat or a hoodie. The truth is we can all be innovative in our own ways. You can make an innovative sales call, deliver an innovative report, send an innovative email. Yes, innovation still counts even if it doesn't change the world. And there are a lot of people doing things out there right now that are innovating, who are changing the world. So let's move on to our panelists and get started with our questions. Sheldon Stone is the restructuring practice leader at Amherst Partners, located in Birmingham, Michigan. Sheldon is recognized at providing financial and strategic solutions in the area of corporate revitalization in the automotive, energy, building materials, construction, manufacturing, real estate, and retail industries. Michael Flueller is a patent attorney at Fishman Stewart. As a patent attorney, he's a trusted advisor to many companies, focusing on various technologies in his portfolio. Before joining Fishman Stewart, Michael was in-house counsel at a medical device company where he used the patent process and licensed those technologies to increase company value in a variety of medical technologies. So before we get to our first question, I would like just to launch a quick poll, and all of our participants will have a moment to answer these questions. And Sheldon, can you see the questions?
I can.
Okay, all right. So our participants will start answering the questions. So please do us a favor and sign in there. All right, we're starting to get some votes. 3% recording, 7%. It's really neat how innovation of instantaneous poll taking can benefit even a webinar like this, where we're all getting instant feedback. And that's very helpful. So we'll give this a couple more seconds. We have about 32% response coming in. We have 4 questions here. And then I will actually post the results here shortly so that our panelists can see the response. And I believe our participants, we have a lot of participants all around from the country right now. Thank you for joining us. And the participants will be able to see the results as well. Then we're going to get into questions with Sheldon. Okay, I think we have a good section of our folks that have participated. Sheldon, can you see the results?
I can.
All right, we have 74% said their company is currently finding new opportunities during the crisis. That's fabulous news.
That's great.
And we have 68% people indicate that the company is creating new products and services. That's good. That means that's very exciting. There's some innovators out there. Question 3, have the market dynamics in your industry changed during the crisis? 100% said yes. That's not surprising, is it, Sheldon?
Not surprising.
Okay. And number 4, will you be leading the market out of this crisis? 58% yes. That's excellent. Happy to hear that. Those are some very positive results.
Very positive.
Very positive results, yes. One of our attendees said they could not see the poll. We will have to see what's going on with that. We will make the poll results available after this event. So, okay, well, that's some good news for us to see. And Sheldon, let's get right into the conversation here.
Great.
Can you give us a quick overview of the restructuring market as you've been seeing it develop here in the last few weeks? What kind of activity are you seeing during this crisis?
Well, a few of us at Amherst couple times, actually 6 times a week, we hold virtual roundtables with professionals in our industry, lenders, PE funds, attorneys, people in finance, non-traditional banks, and everyone's really expecting the activity, the restructuring activity, to begin sometime later this month, June, beginning of July. And the reason for that is that those of us like myself who are financial advisors in the industry and attorneys in the industry, initially, let's say mid-March, we were helping companies that were beginning to shut down communicate to their banks, communicate to their vendors, communicate to their customers, prepare their companies to either shut down or significantly reduce their operations. After that came the wave of helping companies apply for the PPP loans, interpret the ever-changing definitions and requirements that were part of the PPP loans, and assisting them really in some cases through the difficult approval process there. But now, in the last week or two, we have seen what I'll just call a trickle of referrals come in, primarily from lenders who have credits, banks who have credits that have been impacted by the COVID shutdown. And in these cases, the banks are wanting a financial advisor to go in and really monitor cash and operations to give them an objective third-person view of what they think the company is going to be able to do, the pitfalls that they'll have in front of them, and when they'll be able to actually get back up and running. But we expect a lot of bankruptcies, distressed sales, et cetera, receiverships, again, starting late spring, early summer.
Okay, that's somewhat consistent with some of the reports we've been reading from the standpoint of potential failure rates by companies, and it sounds like you're going to be very busy in the coming months.
Yeah, we're like I mentioned, our industry is really gearing up for having a busy upcoming months, if not longer, and that's perhaps one of the differences between this recession and the 08-09 Great Recession.
Mm-hmm. Michael, look from an intellectual property attorney perspective, what types of things are you seeing regarding innovation during this crisis? How are companies reacting right now?
So if you look at kind of the typical perspective of companies is how are we going to disrupt the market? So they're always searching for like the new path, the way to clear profitability, the new kind of hottest area. Now we have an entire market that's disrupted. So the playing field's leveled. So you get a lot of the innovation companies or strategic companies that are looking to see how do we pick up these pieces and make the most of it. Or you have a more traditional company that depends on, in-person touch type things, all the no-nos for COVID, and how do they take that business and generate innovation and launch the company into the new space and actually make a positive of the current situation with, the inability to touch and stuff like that. So you see a lot of the companies oriented on strategy and innovation, essentially double downing on innovation.
Right. So on that point, Michael, I suspect there are going to be winners and losers. Shell is going to be looking at companies that need to be restructured. Maybe there'll be a winner. They'll come out as strong. From an intellectual property standpoint, I suspect there'll be winners and losers as well. Is there a correlation between companies that innovate and create new forms of IP and those that don't innovate? And also, is there any correlation between profitability and how that can be impacted for companies that are, say, now currently innovating?
Yeah. So typically following a recession and immediately in the recession, innovation is one of the things that drastically changes. So in the last recession period, starting around 2007, during the recession or in the kind of the disruption stall period, you saw a 17% increase in profitability for companies that were investing in innovation R&D. This is 17% boost profitability of those companies that are, we know this, we want our business to survive. The situation's changed. Let's make something of it. Approximately the 7 years following the disruption, for those same companies that started the innovation process early, they experienced a 13% growth in profitability for the next 7 years. So again, they created that delta early on, and they were able to carry through that delta and enhance profitability. And so you look at the decade surrounding it for the companies that started increasing spend in R&D and innovation. For that decade, it resulted in a 14% increase in profitability for the entire decade. So lesson learned, we're in the same scenario now, maybe even worse. And so historically, those that dive back in very early, restructure, innovate, they're going to be on a supreme advantage for the next decade.
That's a great point. So those stats right there really show the need for innovation, and then the return on that, as you indicated, is quite large for those who are a winner coming out of this process. Sheldon, let's keep on the same thing. From your perspective, how important will innovation be in planning and coming out of this crisis? And what do you think will happen to those companies who don't innovate?
Well, I think it's real important, and we've already spoken to companies that have begun to innovate, because we had 100% of our participants in this webinar say that their market dynamics have changed, and which is phenomenal. And it means that people are looking at their markets, they're looking at or anticipating what the trends are going to be, and saying, if we're going to be a leader in this market and really have the ability to thrive, we're going to have to innovate. And so let me give you an example. Yesterday, I was speaking with the CEO of a airline services company, and they repair, renovate, and clean airline seats. So when a jetliner goes in for its scheduled maintenance and inspection, the seats will come out. They'll send the seats to this company, and they'll do what they have to, and they go back in. And when the airliner is done with its inspection and maintenance, we get new seats to sit on when we're flying that plane. Well, the airline industry is one of the industries that's been devastated. So this company has actually already procured contracts with bus companies, Amtrak, and other local transport companies to work on their seats. They're also looking in terms of expanding their lines of business to the overhead council, if you will, in airlines that hold the oxygen masks, the airflow thing, and the light. Because what they told me was they can buy these things used for $1,000, put $1,000 into them, and sell them back to the airlines for $4,000. So that's a great example of innovating in really a business that has been significantly impacted by the crisis. In fact, on this call, he mentioned that 2 of their competitors have already gone out of business. So here they have the opportunity. There's less players in the market. They can capture market share as airlines come back online, and now they've expanded to other lines of business. So that's a great example of someone that quickly innovated and actually probably will thrive as time goes on.
Well, Sheldon, kind of carrying on with that same theme right there, you indicate that this particular potential customer is innovating in an area, and there's maybe some companies going out of business. Their competition's going out of business. The stat I mentioned right at the opening here, 1 in 7 mission companies may not open. Even if you extrapolate that over all 50 states, that is a lot of companies across the United States that may not open. What kind of opportunities does that create for your clients, for example, to be looking at companies that may not be reopening, specifically if they're a potential competitor?
Yes, specifically if they're a competitor, it opens up our opportunity to provide, to capture more revenue with respect to whatever they do, whether it's manufacturing of products or it's delivery of services. That's number one. But as we spoke about in the past, customers, in particularly OEMs, they're also looking at this as an opportunity to perhaps drive prices down, where now that there's less competition, they can go to they can go to people who supply them, and they can play one off the other and say, you're company A, you're supplying me these parts or this service. Company B can do it for less. Can you be able to meet company B's price? And so there's going to be tug of war in the market relative to price elasticity and exactly how companies will be able to come out of this in the wash.
Interesting, interesting. Well, let's ask a similar question to Michael from an IP standpoint. There will be companies that may not reopen, and they're going to have human capital, innovations, intellectual property, perhaps on the shelf, that's going to be available to potential strong companies who may want to look and buy those assets. Michael, are you seeing any activity by healthy companies, or maybe they're going to be going out and looking at purchasing the intellectual property from maybe a failing company? And if so, what?
Yeah, so the biggest kind of reach out in the past couple of months is larger companies. Typically, they don't indicate the exact buyer, but they're looking to buy assets. So there's a number of key spaces that people are accumulating intellectual property assets, and it looks like they're looking for very large quantities, and I suspect it's to kind of fuel the launch out of this kind of crisis. In terms of some of the typical stuff you run into, whether your company is going through that or you're buying those kind of things, is typically not all of those assets have been maintained, and they're not maintained in a way that you may be able to proceed and operate in the same fashion as prior. Some examples is if you're buying assets of the company, that does not mean you have rights to use the name of the company. That depends on you actually acquiring the trademarks and having rights to use that name. Key employees, if you're buying some kind of distressed asset or anything like that, what protections are in place to make sure that those employees don't set up shop across the street and start competing with you. So typically you're looking for the agreements with employees, non-competes that are in place. And also they've been putting, maybe the secret sauces in a manufacturing process or some kind of aspect to one of their products. And so do they have they taken the appropriate measures to keep those secret or to kind of embrace the know-how or really be able to protect those things? Because nobody wants to buy an asset and then you get a bunch of equipment that you have no employees to run, you have no right to use the name, and really no basis to make a profit out of it. So it's a really kind of process that, due diligence is more key than ever. If it's a great price, you need to understand what you're getting for the price, and you're actually going to be able to utilize what you're buying.
Yeah, so just to follow up on that point, Michael, how can the acquisition of maybe a competitor's intellectual property that maybe they have available now that they're going out of business, how can that improve the enterprise value of the strong company, the company that may be acquiring those assets? How does that increase the company value?
Yeah, so and it really just depends on where it occurs, but there's a great opportunity to formalize some of those assets, and so you can actually capitalize them in terms of formal assets. So in terms of if the name has no trademark protection, protecting the name, wrapping a patent application around some unique aspects to products or to processes, and putting invention disclosure policies in place, putting a trade secret policy in place. All those things allow you to kind of draw a box around what is otherwise considered an expenditure for R&D, and actually say these are intellectual property assets. So when that new buyer comes, they can actually allocate those as assets rather than being lumped in a general category of goodwill. So they actually serve as things you can buy and sell, and also reduce risks of the operating company from competitors, et cetera. So there's definitely techniques pre-sale and post-sale to optimize the value.
Right. Okay. It sounds like there's some good opportunities out there for increasing enterprise value by implementing some strategies that Sheldon talked about, that you talked about, Mike. Sheldon, I'd like to follow up with you, kind of moving into a next series of questions. We've been talking about the importance of innovation and how companies are innovating and how they're protecting their intellectual property. Sheldon, what are some things that companies can do now to ensure stability and sustainability of their business as they move forward through this crisis?
Well, one thing is the first thing that any company should be doing right now is they should be getting a clear picture of what their cash looks like. And typically that is done through a 13-week cash flow, developing a 13-week cash flow schedule. And by getting a key or a clear picture rather of their cash, then that's the first step in knowing what they can and can't do relative to sustainability. Once they have that down, then they'll be able to look at other things strategically that they'll be able to do and relative to the amount of cash that they have. But companies that have received the PPP money, they should really look at this 8-week period that they have, because as an equity check that ownership or shareholders have written and injected into the company. And that's one of the fundamental differences between what we're going through now in the recession of 08 and 09. There was no PPP money. It was adapt or die. Either companies made it or they didn't. And now you have banks have much stronger balance sheets. They're really giving their customers a lot of leeway relative to not paying principal or not paying principal and interest. The regulators have backed off on that. So essentially, there is a period of time that companies have here now of at least 8 weeks to take a look at their market, to take a look at their business model, and look at the opportunities that they have in front of them, not only for sustainability, but going back to your last question, Doug, what can they do to grow their market share within their market segments that they currently serve, and not just use this time to pay employees, which is important, meaning not use the money, but make use of the time to be able to strategically look at their business and say, what do we have to do to be able to take advantage of the crisis?
Yeah. And you mentioned some time frames there. You know, the PPP is basically the 8-week period for covering different expenses, employee expenses, insurance, rent, things like that by the company. That's an 8-week kind of vision, and that's an opportunity right now for companies kind of to be looking at how they can be planning to get out of this. But I have a longer term question for you. How long do you think it'll be before things get back to normal? Can you get out your crystal ball?
Yeah, well, first of all, I think it's going to come in segments or waves or phases. Going back to my conversation with the airline CEO or airline service company CEO yesterday, their lobbying group, they had a call with their lobbying group last week, and the lobbying group based in DC said that they're forecasting that the airline industry will be recover 50% by December of where they were in pre-COVID revenue. But the next 50%, and this is something that's almost mind-boggling, the next 50% to get back to that 100% will take 7 to 10 years for that one industry, the airline industry. So I think it's going to be different for industry by industry. You know, industries that are in hospitality, restaurants, entertainment, it's going to take longer. I don't think any of us are going to go sit in the big house this fall at U of M with 113 of our closest friends and watch a football game. And the other thing that's happening that is not out there, but we should take note of it, is last week the Fed had a call with bank CEOs across the country. And the first quarter earnings for banks was a record quarter in the United States. So what the Fed suggested was taking half of those profits and applying it to loan losses in the second quarter, because we all know that the second quarter is going to be just devastating relative to economic performance.
Mm-hmm.
So not all banks will take 50%, some will take 10, some will take 25, but the point is that loan losses will be less in the second quarter than they should be. And that may give banks a little more leeway in terms of dealing with companies that are going through some financial distress, which may elongate the time that they have available to them to be able to ensure their sustainability and or innovate.
Yeah. So there's a couple questions for you, Sheldon, in the chat room. Actually, I'm sorry, the Q&A room. And I'll just read it to you. It's from a manufacturing company here in Michigan. And it says, how does Sheldon look at 8 weeks of PPP loan when we have executive orders to stay at home and their manufacturing business is not an essential manufacturer? Any thoughts on that, Sheldon?
That's a great question. Some of our clients are conducting business who are shut down and not manufacturing. And a lot of our clients are manufacturing clients are still conducting business like this over Zoom. They're doing forecasts. They're looking for opportunities to cut costs, and they're also looking for information that will provide them that once their business gets up and running again, what is the pro forma of their business? How much money will they need to ramp back up and have that, so when we are able to come out of our homes and get off of Zoom and be in our respective businesses, that we'll have a plan there, and we will have used this time at the very least to develop that plan.
Got it. Very good. Very good. Thank you for answering that question from our audience.
Thank you for the question.
Yeah,
good question.
There's another one in there. You can look at it. I have a question for Michael now. Sheldon was talking about the things that companies can do to ensure sustainability of their business going forward. A similar question on the IP front. What are some IP practices that companies can be doing right now, Michael, to actually survive?
Yeah, I think the essential first step is identifying the competitive advantage of the business to set the baseline of priorities. In terms of with everything changing, your competitive advantage 3 months ago may be different than it is now and moving forward. So level set on what's the strong points of the business, understanding the kind of the new competition and the new market you have there. And as some of the items to touch base on is avoiding those business fatal risks. So look at ownership of typically like intellectual property or any kind of IP assets. Make sure that all those are properly allocated to the company. Look at employee risks. If those employees are key to the competitive advantage, what kind of language or different kind of policies are in place to make sure that if there is any transition with those employees, that you're still sustaining the competitive advantage. And then I would also look at third-party relationships. We're in a high-risk environment here with a lot of moving parts in terms of the supply chain. Typically coming out of any kind of market disruption, there's it's typically a 20% increase in litigation across the board, typically focus on patents and all those kind of things. so it's a big question of, are those relationships clean? Are there indemnification provisions in there if you bought that product from somebody else, that you're not going to get sued or responsible for that? Um, there's a question here on China.
Yep, I can read the question
Yeah.
for you. And um, the China factor. Someone asked, for U.S. companies that compete versus China, will we see U.S. top-level companies, for example, auto OEMs, rethink China resourcing or sourcing strategies? Could this benefit the so-called traditional U.S. supplier? And if so, how could it benefit the traditional supplier? Michael, you want to comment on that first, and then maybe Sheldon?
Sure.
Yeah, I think it's going to change in terms of the last 5 years, innovation, and there was a huge surge in artificial intelligence and everything coming and being filed in China, and still, as of last year, the largest influx of innovation now coming into the U.S. is from China. So I think the best way of dealing with that, I think it's definitely going to change things. I would. It's obviously depends on company to company, but if there's critical assets and services that are beneficial to the CV environment within the U.S., I think we have to leverage those and understand the new market for those. But I don't think that the things that a lot of the good things that are coming out of China are going to stop. So I think we need to understand how to embrace kind of the worldwide market in light of the CV situation, and how we can kind of stay ahead of that in light of all this change.
Okay. Sheldon?
Yeah, I mean, China's the competitive advantage that China has had for years and years and years is the cost of labor. Well, their cost of labor now is higher than Mexico, and so onshoring to either the U.S. or onshoring to Mexico, and having whatever was formerly produced in China produced in Mexico is going to be a big benefit. And now, it's going to be kind of interesting to see what happens as this talk unfolds relative to China suppressing information about the virus and letting it get out when maybe they could have informed the world earlier than they did. What backlash that's going to have on manufacturing moving back over here or moving to other countries that currently import goods or services from China. So it should really be a benefit for U.S. and companies in other countries as a result of what's going on.
Yeah, yeah. All right, thank you for answering that question. There are a few other questions in the chat room. We may get to those at the end. I want to move on to our final topic so that we're kind of being timely and respectful of our participants' time today. And the third topic really is focusing on valuations, company valuations. Sheldon, as you know, coming into this crisis, valuations were at an all-time high, mass amounts of dry powder on the sidelines by all kinds of strategics, and private equity investment banking firms. And there's just, it's a different dynamic. Here we are in May. And my question for you is, since the pre-COVID-19 valuations, company valuations were at an all-time high, how do you think that's changed now in view of the crisis? And are they likely to go lower? Or is it based upon what kind of business or solutions being delivered? Maybe they'll have a higher valuation, like maybe Zoom that we're using today. We know their stock prices skyrocketed. So IT companies, software companies, companies solving the COVID crisis may have a higher valuation. Some that are not, maybe not. So what's your thought on valuations at this point in time?
Well, I think initially there was just across M&A, there was just fear. What's going to happen? And here's a good example. Amherst has two clients, healthy companies. Our investment bank practice in the firm was selling these two companies related to the food industry. both of these companies right now are just knocking the ball out of the park relative to revenue. But the buyer in each of these instances has hit the pause button because at the time they did not know what's going to happen, and relative to the business, relative to valuations, and so those two are not an isolated instance. So I think relative to valuations in certain industries, you're going to see the valuations maintained or increase as a result of both the need of that business and that industry as time goes on, or in the case of other industries, valuations just go down. We were engaged to sell a company in the automotive industry in early February. The potential buyer was in the process of doing due diligence and ultimately submitted an LOI, but they admitted, we don't know what the value of this is. For one reason is, and Michael was talking earlier about the value of equipment, something that was worth X in January is worth something less than X now. And I'm talking in particular in automotive and manufacturing. And so what do you pay for that company? Now, over time, as the economy starts to ramp up, the picture will become clearer. But for certain industries, you'll see valuations stagnate or go up slightly or decline. And in other industries, you will see valuations just continue to accelerate.
Mm-hmm. Well, on the same line of thought, Sheldon, what are the different ways that an enterprise can actually protect its current valuation or maybe even increase its valuation in order to maximize the sale price coming out of this? What can they be doing now?
Yeah, that's a good question, and I think Michael will want to weigh in on this too, because one of my short answers is if they have IP, is to protect that IP, and if they don't have that IP valued, they should get it valued. But the other thing is what we've been talking about. If you're going to protect or try to increase your enterprise value, innovate in terms of your business model. Set yourself apart from the pack. I'll give another example. We have a client that they build custom displays for large trade shows like the Detroit International Auto Show. That whole industry has effectively shut down. What this company did was they started developing digital solutions for their clients to be able to show their product to their customers. So they got out ahead of the curve by developing these, rather than taking the product and shipping it around in a 53-foot trailer that was outfitted like a showroom. They started to develop 3D digital models to be able to demonstrate that would allow their customers to demonstrate their product to their customers. So they're already thinking ahead that public shows or private shows may not happen for another 12 to 18 months, and my business would not survive. So how can I get ahead of the pack by innovating my business model?
That's a great example right there with a current customer already innovating early in the process by going to the 3D concept and leveraging that. So very good. Michael, let's ask the question that Sheldon posed and wants you to answer. With respect to IP valuations, no matter what kind of asset it is, whether it's a patent, trademark, copyright, trade secrets, human capital, there are lots of different things fall underneath the IP bucket. How do you think IP valuations will change during this crisis?
I think that right now we have a sense of urgency, high sense of demand for a number of product segments that was not there 6 months ago. So I think a question that comes up is how do you fit into the new market, and how can you leverage value from that? And so a key and part of that is you have something you can sell. So, do you have the name of the company? Do you have, if you're a software company, do you have the code under copyright? Do you have, say you haven't taken any formal means of intellectual property protection, do you have at least protocols for protecting trade secrets and confidential information? And use all of that. If there's a way to formalize it, there's a way to value it. And there's different techniques for looking at value, but if you don't have any mechanism for wrapping your arms around it, it's just kind of a conglomeration of people and physical assets, you're losing that whole different angle of value that sometimes is beyond a function of the actual business revenue. So long story short, I think there's a huge demand in this market. And I think it's the companies that find the fit that way their company can fit into this current market are going to be able to, whether they're looking for a liquidity event or even a competitive advantage over the next decade, find the fit now. And I think you'll have substantial leverage in the future.
Yeah, it sounds like finding those fits early in the process, then protecting it through the different intellectual property tools and the tackle box you have will be a great way of kind of ensuring you're enhancing your company value by protecting your IP assets. So it's time for us to wrap up here. We're going a little bit long. I apologize that to our viewers. Sheldon, I'll let you have kind of a final say. Any final tip you'd like our viewers to think about today as they take away on our topic here of thriving in the new normal? We don't know what the new normal is, but what are your thoughts?
Yeah, no, we don't. And I just would encourage people, if you're a manager or owner of a company on the webinar here, or an advisor to a company, is it's hard to do now. We're in the middle of a crisis. You're worrying about your business. You're worrying about your employees. What's going to happen here is really take a breath as best you can and step back and take a fact-based, objective view of your business. And that sounds, I mean, it's easier said than done, but I believe, because I'm living this with clients now, people who are able to do that will come out ahead of wherever you would be if you didn't take that minute. It's not a minute, but take that time to look at your business and at least get a plan to when you ramp back up, that you have a plan in front of you and you'll be able to execute. I want to go back to one of the things that Doug opened this with, a comment by Josh Linkler, and that is, sometimes innovation is simple. And I want to give you a quick example. We have a manufacturing client that produces large parts for Class 8 trucks, over-the-road trucks. And they've been running because those manufacturers like Navistar and Daimler, they're essential business. They've been designed essential business by the U.S. government. So we had to redesign the work cell to enable people to social distance and be safe during the manufacturing process. So what we did was we literally took cardboard and designed a slide for the parts to come off the press that separated the press operator by the person that was handling the parts and putting them in the containers to be shipped by more than 6 feet. So not only did that piece of cardboard enable the workers and the business to adhere to CDC guidelines, it increased productivity by 70%. And so sometimes it is something very simple and doesn't have to take a lot of time or a lot of thought to get the job done to innovate.
Mm-hmm. Excellent. There's a comment in our chat room by one of our listeners saying, You need to assess your company's current state and put a plan together for moving forward.
Perfect.
Yep. Thank
Well
you for
said.
that. Thank you for that comment, Alan. Michael, last word. Any final words on, from an intellectual property standpoint, on the new norm and what people should maybe be thinking and doing?
Yeah, I think the opportunity is before us, and I think it's, to Sheldon's point, the more objectively you can look at your company. You're not, quote unquote, this kind of company, because if that's the case, you're not going to be around in the near future. It's time to look objectively at where you are. What's your competitive advantage? There's a number of techniques to look at the market and the innovation market and identify white space there, and then double down and move into truly new space. This is the time to re-innovate and focus on the essentially where your new fit in is in the market.
Yeah, good. Great words of advice there from our panelists. We need to wrap up now. We're getting a little long here in our presentation. I want to thank Sheldon from Amherst Partners. Sheldon, thank you.
Thank you.
How can people find you? What's your best way?
Best way these days is my email, which I think is been shared, but if not, and that slips by, it is very simple. It is sstone@amherstpartners.com.
Okay, Michael?
Yeah, again, my information, it should be right there.
It is.
Oh, very good.
fishstewip.com, and my email is mfluhler@fishstew.com.
Good. Thank you, guys. We hope everybody participating today learned something new. We appreciate that. Our goal is to help companies innovate and protect their innovations, and more importantly, to help you get through this crisis altogether. This has been recorded. It will be rebroadcasted and put on the Fishman Stewart YouTube channel. You'll see that out there. And finally, our panelists are going to put together a one-page little tip sheet about the topics discussed here. That will be made available to our attendees. And you'll see that in about a day or two, okay? Thank you for everything. This concludes our conversation today. Stay safe and do care to care for others. Thank you.
Thank you very much, Doug. Michael.
Thank you.
Bye-bye.
Have a good day.